Hey, this is Tom, and we got some breaking news. UBS is now confirmed to buy Credit Suisse. The deal is happening, $3.2 billion, and according to reports, they're going to finalize everything to get this deal done and closed by breakfast on Monday, which is pretty insane, given the fact that these deals sort of take like a year to carry out in normal time. But these are obviously not normal times. In this video, everything you need to know about this deal, how it's going to be structured, how it's going to work out, what's going to happen to the shareholders, what's the potential of a contagion in Europe and potentially in the banking industry in the US, everything you need to know. But first of all, don't click nothing, don't smash nothing, and don't buy nothing. And now let's get started. So 3 days ago, I posted a video saying that Credit Suisse will be sold to UBS. Despite the reluctance of the latter to take this deal, it will be forced upon UBS by the Swiss government by making this deal super sweet and impossible to refuse. Kind of a make them an offer they can refuse, Vinny, sort of thing. So basically, it's exactly what happened. So it's not like I'm a genius. There's not a lot of options out here. I mean, the bank was going under, and it was either going to be sold to Deutsche Bank, which had interest, but the Swiss will never sell it to the Germans, or they had to nationalize this shit, and that they don't want to do. So the only option is UBS by making this deal impossible to refuse. So the current market cap of Credit Suisse is about $7 to $8 billion. Credit Suisse is being sold to UBS for $3.2 billion. You do the math, but it's pretty much less than half price. On top of that, the Swiss government is going to make sure that up to $9 billion of BS, and that's bullshit, that Credit Suisse has gotten themselves into will be borne and recouped and actually taken care of by the Swiss government. So up to $9 billion of stupid mistakes made by Credit Suisse is now the government's problems and not UBS's thing to worry about. On top of that, the government is extending a $100 billion loan to Credit Suisse under the management of UBS to sort their act together. I think this deal is impossible to refuse for UBS, and that's why it's actually happening. On top of that, the Swiss government is actually circumventing the whole shareholder approval, democracy, free market thing, and they're basically overriding the shareholders. Nobody's asking the shareholders of Credit Suisse nothing. This deal is happening, and it's happening fast. Faster than a heart attack. In fact, I've never seen a merger happen this fast in my life. I mean, this shit usually takes 6 to 12 months in a normal time. But then again, as I said, these are not normal times. And in case you're wondering what's going to happen to the shareholders of Credit Suisse, well, they're getting a haircut. For every 22 shares of Credit Suisse, they're getting 1 share of UBS, which is about half of the financial value that they held on the eve of this deal. They are getting a massive, massive shortcut. But on the other hand, if you chose to invest your money in a company that got involved in tax evasions, money laundering, corporate espionage, Archegos Capital, etc., 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 I mean, what were you thinking? I mean, this was bound to happen. Now, the more important stuff that happened over the course of this deal actually materializing is that the Swiss finance minister held a press conference with the chairman of Credit Suisse in which they all basically blew smoke up of everybody's ass. So the Swiss finance minister explained how this is not a bailout, of course. She called it a financial solution, which I found very, very funny. Yes, it is a financial solution, which is called a bailout. You guys just bailed them out. You extended $100 billion of credit and $9 billion of guarantees and gave it to them at half price without asking the shareholders. That is a bailout, ladies and gentlemen. Also, they admitted that Credit Suisse was on the brink of collapse and bankruptcy, which we kind of knew, but that was never confirmed until now. Now, Alex Lehman, which is the chairman of Credit Suisse, funny name, by the way, given what's going on right now. So Alex Lehman, I'm sure there's no connection to the Lehman Brothers, but Alex Lehman, the chairman of Credit Suisse, was also in that press conference and explaining how this whole thing happened because of the US banking collapse. So basically, he was saying that the collapse of Silicon Valley Bank collapsed Credit Suisse and how the Americans are at fault of this, etc., 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 which is probably one of the most laughable arguments I've heard in my lifetime. Because look, you're ignoring a few important critical facts if that's what you want to argue. Number one, Credit Suisse lost 38% of their deposits. 38% of their deposits in the last 3 months of 2022, long before the US banking crisis. Number two, they lost $7 billion in 2022, which is the most they've lost in a year, and actually the entire profits they had in the previous decade. And they managed to lose $5.5 billion in the Archegos capital scandal, basically where everybody found out that they had no risk, no idea what they were doing with the money. And they just had PwC, their own auditor, file an adverse opinion on their own financials. So I don't think none of this has to do with the U.S. banking collapse, because everything I just pointed out happened way before the U.S. banking collapse. So I find that argument a little bit laughable, but what do you expect from the chairman of Credit Suisse? I mean, not the best management. Now, let's talk about the risk of contagion. Is this a risk of contagion for the U.S. banking sector, for the global banking sector? Let's talk about it. So I guess the short answer is no, and I want to show you a little bit why. Look, the top 3 banks with the most amount of uninsured deposits in the United States before the collapse, they were Silicon Valley Bank, Signature Bank, First Republic. All of them de facto are bankrupt, including First Republic that got bailed out, but that's a whole different story. Now, on the flip side of that, the top 3 banks with the least diverse business lines are Silvergate, Silicon Valley Bank, and Signature Bank. Now you get where I'm going with this? So as you can see, these 4 banks, Silicon Valley Bank, Silvergate, Signature Bank, and First Republic, are very unique cases that all got destroyed, including First Republic. Now, if you ask anybody in the banking industry, what is the stinkiest, worst performing bank out of all the globally important systemic banks out there? And that's actually a definition. Well, everybody's going to say in the past 5 years, Credit Suisse. In the past 2 years, Credit Suisse. In the past year, Credit Suisse. Credit Suisse was substantially, effectively, the least performing, the worst performing globally important systemic bank in the world for years. I'm going to go as far as saying in the past 20 years. So to see that collapse is just kind of finally, finally this thing collapsed. How they stayed in business for so long with all the screw-ups they had, nobody knows, but finally it's over. So as far as a global contagion banking collapse, no, you will see consolidation, you will see mergers, smaller banks, weaker banks, definitely. But as far as a global collapse of the banking system, no, that's not happening. And I actually want to say I was kind of surprised by the speed at which both the U.S. regulators and the Swiss regulators moved on this. Both swept in on the weekend and sorted that stuff out. Not an easy thing to do, especially if you know their history. These are not fast-moving organizations. So I think that contributed to the fact that everything kind of played itself out. I think now we're at the final stretch. We're getting out of it, ready to move on to the actual problem, which is inflation. And if you're still here at this point in the video, well, that means you're an OG on the channel, and that means I want to talk to you. I want you to check out Stock MVP in case you haven't yet. A lot of you have, but for those of you who are kind of on the fence, look, you can try it out for a whole week for free. Check it out. See if it can help you, because I know it can. I helped build this because there was nothing like this on the market. I built this for myself. It has everything I need. I can run DCF models. I can look at insider selling and buying, institutional selling and buying. I can look at trends. I can analyze a stock A to Z, look at all the financials, break it down by quarterly, by annually, everything. And in case you're already in love with it, make sure you don't pay the full price. If you're watching this video, use the code LAST50. It's going to give you a 50% off, so you don't have to pay the full price. And that's a lifetime coupon. Thank you so much. Love you all. See you in the next video.